Welcome back to another episode of the Vector Guide. In this episode, we're going to talk about the moving average. It's probably one of the most popular classic indicators used in technical analysis. There are 4 types of moving averages available within the vector platform: the simple, weighted, exponential, and Wells-Wilder. The main differences between them is how each moving average is calculated, which changes the responsiveness of the trendline according to our given price data. For demonstrative purposes, we're going to talk about the simple and exponential moving averages in this video. Just like in the traditional stock market, the moving average plots points on a chart based on price data and helps us filter out the market noise by focusing on relevant price trends within a given period. It's also known as a lagging indicator because of the fact that it's calculated using past price data to plot the moving average trend line. For example, a moving average of 20 periods on a one-day chart will plot the price action of a given crypto asset of the last 20 days, i.e. the last 20 candles, and will also create an average price. The moving average allows a trader to better understand buy and sell signals as well as determine support and resistance levels. But how does it accomplish this? Well, for starters, we have price action plotted onto our charts, and the moving average is calculated based on the price data of any given crypto asset, as aforementioned. And it's moving because it's continuously calculating the average price, and consequently, its trend line serves as a historically accurate indicator. To access the moving average, we're going to go to the top of the menu bar under View and select Indicators. We can also click this Indicators tab here and select Add Indicator. So let's go ahead and search for the moving average. We can also see that it's one of the most popular indicators on the platform, so we can select that. We'll add it to our existing chart, and then we'll select the number of intervals or the number of periods. So for demonstrative purposes, we'll stick with 20. We'll click OK, and then OK once more. Now that we've plotted our moving average, we can see that our trend line does a good job of tracking the price action of the crypto asset trading pair, which in this case is Bitcoin to USDT, Bitcoin to Tether. We can also observe that there has been plenty of ups and downs within the crypto market within the last few months. In general terms, the moving average is an intuitive indicator that tells us a variety of different things about a crypto asset's price action, such as whether we're in a market uptrend or downtrend. It also helps us identify support and resistance levels, as aforementioned. The price action movement above or below our trend line also gives us important buy and sell signals. We can see that the price action of these candlesticks, for example, are below the moving average, with sharp ups and downs, meaning that here we have a sideways market where market participants aren't really sure about their next market move. We can also observe that the price action of the crypto asset moves above our 20-day moving average right about here, serving as a buy signal. So if we enter the market at this point where the price action trends above our moving average, we can input a buy order and take advantage of this bullish market. In other words, we could have taken advantage of this market uptrend. Up top here, we enter into another sideways market, again where market participants aren't exactly sure what their next trade is going to be. Then the price action of the crypto asset moves below our 20-day moving average trend line, right about here, serving as our sell signal. In other words, if we exited the market at this point, we could lock in our profits made from our trade and protect ourselves from a market downtrend. All these market tops and bottoms created by the market volatility help us better establish different points of support and resistance. These sharp market ups and downs are known as whipsaws. Whipsaws can actually make it harder to view trends, especially with a simple moving average of 20 days, since it's a bit slower to react to price changes because of the way it's calculated. In comparison, an exponential moving average reacts faster to price changes, and as a result, does a better job of tracking the price action of a crypto asset. So let's go ahead and change our existing simple moving average to an exponential moving average for the same number of periods, which again in our example is 20. In order to do this, we're going to hover over and click on our moving average. And now that we've accessed its properties, we'll change our type to exponential. Then we'd click apply and then OK. Now we can say that our trend line is a bit less smooth than before because it's now more reactive to the price action of a fast-moving crypto market. By double-clicking once more on our moving average trend line, we can access our properties, and we can also change the number of periods, change the appearance of our trend line, so we can change the style, the color, and the thickness. And we can also change the basis of the price calculation of our moving average. Alright, so let's go back to our Appearance tab. We'll keep the style of the line the same. We'll change the color to fuchsia, and we'll change the thickness to 4. We'll click Apply, and then OK. And as you can see, our changes have been made onto our screen. Thanks again for watching this video on how to maximize your reading of the charts using the moving average. Don't forget to like this video, share it with others, subscribe to our channel, and activate notifications to receive more useful content and trading tips when using the Vector platform. We'll see you soon.